Good morning, everyone. How are we all doing? Buy or sell? Let me welcome everyone. And here we got Joe Scott Kamayu. I think I'm probably butchering that name. Sorry about that. Jamie, what's up? Sigma Squeeze, hello. The Basketball Podcast, what's up? Detroit Diesel, Ben Fisher. How we all doing this morning? Today we got, of course, FOMC. We should see a lot of volatility on the chart, so we'll go ahead, cover the price action, and then I'll get to your guys' questions later on in the stream. Let me know how audio is, though. Let's get that sorted first and foremost. I'm gonna turn down the music actually a little bit more. I think that's probably a little too loud. So, how is that for sound? Is that music at a good level? Can you hear me? Let me go ahead and jump out of the 5-minute time frame here. Very good, awesome. Sounds like you're in the next room. Audio's good, audio's good. Hopefully it's good. I turned down the music, so should be able to hear me. But yeah, let's go ahead. Let's talk about the Bitcoin price action. So I'm actually in a long right now. I was able to get into a long yesterday. I don't recommend trading on FOMC days, but if you're able to get in beforehand, you can sometimes ride the volatility without getting stopped out. Essentially what I did here is I saw this sweep into the CME gap, as we discussed in the YouTube video, right? We have this CME gap on the chart from the Chicago Mercantile Exchange's futures, right? They're closed during the weekend. Let me get a box for that, not a measure tool. You can see box of support from that CME gap. We wicked through it, cleaning out that inefficiency in the chart, testing that range, found support in it, and once you got the sweep back out of it, went ahead and took swing low, swing high, and entered in from the 5.8 to 7.86. So essentially I was entering in staggered limit positions right throughout here, and my stop is now at entry. So we'll see if I can stay in that position or if Jerome's going to stop me out today. We can go ahead and remove this CME gap though, because that is no longer in play. Remove these fibs. Let's talk about what I think Bitcoin is going to do structurally, right? So I think this is a structurally good low. We cleaned out the liquidity and we found nice support within there. We have a lot of bullish indicators on the chart, such as like hidden bullish divergences. And we have these vector candles to the upside, right? These are likely to get filled, especially with these volatile days. If I were to take a guess, right, the last two FOMC meetings, we have had prices swing to the upsides immediately, right? Let's go over that. So we're on the hourly time frame now. Let's talk about these last two FOMC meetings. So this was the last one we had back in June, right? We see price, let me go to this. We see price swing to the upside and then reverse back to the mean. And this one actually was a dump afterwards, right? It was kind of what you could consider a sell the news event, right? So the first move was the fake move, and then we had continuation to the downside after the true secondary move. Whereas the one before that was actually down here back at the lows at 56K. We see price once again swing to the upside, immediately reverse back to the mean, but I wouldn't consider this sell the news because this was just a quick, liquidating all those longs that kind of FOMOed in on the FOMC because leverage positions never get away with opening during these meetings. So reverse back to the mean, and then we actually don't make a new low, and we have a continuation up on higher, and that becomes the low. So this is kind of what I'm hoping for, right? I think we're probably going to get a swing up into these inefficiencies above us on the chart. All right, so let's go back to current price. I would expect something like this, reverse back down, and then hopefully a continuation up, right? Let's all hope we can go to all-time highs relatively soon here. We've been talking about when Bitcoin gets into these impulsive moves to the upside, a lot of times it won't make new lows. I know we do have a CME gap down here, right? We have a lot of liquidity down here. So if we go ahead and check let's just go to CoinGlass on the 1 month time frame. I think this should show it. Yeah, you can see there's liquidity below these lows back here, right? There's some stuff down there. I think maybe a 2-week would actually show it better, which CoinGlass doesn't offer. So we'll go to Coin Inc. Let's go over here to the liquidation heat map. and go to the 2-week time frame. And yeah, you can see there's a liquidation block below these previous lows within here, which I have marked out with this sweep level. I use these like dotted lines on my chart for those sweep levels. So, you know, this is kind of my next line of support on a liquidity basis that would, you know, be advantageous for market makers to grab. But once again, structurally, I think this is going to hold. There's a reason I'm in a long from the lows. I think that is going to remain the lows, and I'm not closing that until probably all-time highs. I'm taking this position all the way up here, and then I'll be taking profit on that breach of all-time highs, because if you guys have been watching the channel, you know I'm kind of scared that the market's about to wrong foot everyone, because these rate cuts historically mark tops in the market. Not exactly, right? It's not going to be like the day that they cut rates is going to mark the exact top, but it's generally around, you know, 2 months before, 2 months after. So I'll be very cautious if we get up here. There's a bunch of euphoria around those rate cuts. Everybody's saying the bull run's just started, when, I mean, we've been in a bull run since October of 2023. That this could potentially be either a swing failure pattern back within the range, or a like deviation back within the range. And as soon as you accept back within the range after breaking out, I would call that a failure, and I would be, you know, pretty confident that was your high. But if we are able to do a clean break like we have, you know, from previous ranges, right? Normally when you break out of these ranges and it's bullish, it doesn't retest it. It just kind of flies. So if we don't deviate back within the range, there's no reason to like really get bearish, right? If we have a clean break to the upside and just start sending towards 6 figures, yeah, I'm open to the idea of a blow off top. I mean, I even believe we can get to $300,000 by the end of 2024, which even your biggest moon boys out there are not really thinking that's their base case, right? But that's definitely a possibility here. Let me see what you guys are saying in the chat down below. When is Powell speaking? So he is going to be going live here in about an hour. Actually, I need to pull up that stream. Let me go ahead and get that. And I can get you the numbers too. So let me go ahead and bring this up here. This is the economic calendar. So the federal funds rate will be released before his conference, right? So this will be at 2 p.m. EST, which is in just 20 minutes. We'll get those numbers, right? If they're going to cut, if they're going to stay paused. By the way, guys, they're going to stay paused. The thumbnail is kind of clickbait. Is he going to do it? No, he's not going to do it. It's like, it's about a 98% chance if we go to the CME group, FOMC rate cuts, over here to the Fed watch, and we do see 98% chance that they're going to stay paused. So if they go against what the market is thinking, that would be extremely surprising and actually pretty bearish, because they're cutting to stimulate the economy, which means the economy is bad, right? If they're having to stimulate, it's not because the economy is good. But yes, that will be at 2 p.m. EST, and then the press conference will be at 2:30 p.m. So that will be in around 50 minutes from now. $40 minutes from now. Do you think we go higher than 75K when we go for all-time high? It depends what, again, it depends what we're doing at all-time highs, right? If it's a swing failure, then probably not, right? Because we go to back to our liquidation maps. We'll go to the 6-month time frame now. And we do see this is our liquidity block, and there's really nothing above 76K. So we would likely grab all of this, but to go past 76K, you're going to need more catalyst than just a short squeeze and grab of liquidity, which is what in a swing failure, that's kind of like the definition of a swing failure. It's just a liquidity grab before the reversal to clean out those positions. So if it's a swing failure, we probably just go to 76, 77. If it's a deviation, we probably go a little bit higher than that, right? We had talked about a deviation, which is essentially we fake the market out because we start backtesting this as support, but the more time we spend here is actually a sign of weakness, and then we'd have a deviation to the upside and then back within failing, something like that. Deviation play, you're looking at, let's just say 78 to 85K. And then if we don't like backtest any of this if it just looks bullish, right? If we just start like going on up, then the sky's the limit. 300K this year. So a lot of different scenarios. We don't really have data to suggest one's going to be much more likely than another. We just got to have our plans in place, get ready to anticipate what the market might do with this Fed cut, especially with what meme coins are doing, right? If we see Pepe go into $50 billion market cap, that's going to be a huge sign. But we don't necessarily want to just rely off of last cycle's targets, because we had stimulus checks. We had, speculation in the markets because people didn't know what these coins could do. Now that there is kind of a basis for that, a lot of those price targets could be front run, right? If we see Pepe go into 30 billion, maybe that's the top signal. Maybe it doesn't need to go all the way up to those same targets as last cycle. But yeah, let's see how price reacts when we get up there. Let's see what the market's like overall, what retail is thinking. If everyone's calling for the same thing, it probably doesn't happen. If everybody's getting bearish at the highs, then probably going to go higher. Oh, not seeing too. Yep, I forgot. Yes, I have I should probably pull up OBS over here so I can actually see that. Yeah, I always forget that when I'm doing these live streams. I have exo charts on the right side of my screen. So let me go ahead and pull this back up. If you couldn't see it that well. Yeah, you can too well. So let me go ahead. This is what I use for my YouTube videos. And you can see these are those numbers right here. So federal funds rate predicted 5.5%. So that will come in at 2 p.m. EST. This is the predictions, right? 98% that they are going to be staying paused. So yeah, sorry about that. You guys probably could not see this before. And then this is kind of the stuff we were looking at on the charts. I mean, you would have been able to see this on the left-hand side, but yeah. Level to the downside right here. Levels to the upside are these inefficiencies in the chart. Probably going to swing up to this, swing back down, and then send to all-time highs. That's what I'm guessing, but of course, Fed meetings, you can't really predict what price action is going to do. You can just kind of guess, and that's why you shouldn't be trading them. But yes, in a long from the lows. So hopefully we can not take out my position. We go ahead. I'm actually going to I'll put exo charts back on the screen though, just because. We'll go ahead and jump back into trading light now. So let me go ahead and do this. And let's talk about trading light. Let me see what the chat's saying before I do that though. Alan, that's the Satoshi. He's not coming out of the woodworks. He's not going to identify himself. He ain't going to say he's shutting down Bitcoin. That would be funny though. Like the government adopts Bitcoin, and then because he's anti-government, he just shuts it down. How do you identify inefficiencies? So there are many different ways, right? They're essentially fast-moving price action within the chart that was not tested. So this can be low volume gaps. So if we go over here to my main chart, these can be low volume gaps on the visible, visible range profile. Essentially anything you're seeing on the charts creates this profile. I'm doing it again, aren't I? I'm just going to go back to this. This profile here on the right hand side that you can now see. You can see these like low volume gaps in here, right? These low volume gaps would be where inefficiencies in the chart are. So fast moving price action hasn't spent a lot of time in there. Not a lot of volume was traded within that range. So that's one type of inefficiency. You can also get these volume levels, these volume profiles on, like a weekly time frame or daily time frame, right? There's a lot of different volume profiles. You can even do like a fixed range, so you can manually pull this to find where these low volume gaps are in the chart, right? So that's one way to find inefficiencies. Second is vector candles. So to get these vector candles, you do Traders Reality Main. That YouTube channel kind of covers vectors a lot, but essentially this indicator shows you different colors on the candle depending on what the volume was like within the candle. That's a real simplification of it, but yeah, the more volume traded, compared to the previous candles will make these like brighter red versus the just like more diluted red colors, right? Like the grayish red. So these bright red candles are vectors, and they often are inefficiencies in the chart. So usually we retrace these vectors at least 50% of the way to test them. So that's another inefficiency. We also have the single prints. So back over here on Trading Light, the single prints are represented by literally single prints on the TPO profile. So the TPO profile is a time-based profile. So the more time you spend at a level, the more prints that the profile, has, the more blocks that it'll have on the profile. So whenever it has only one block, right, because price hasn't spent a lot of time in there, it creates a single print. I like using the like hourly and 30-minute to find these single prints, and you can see they can act as good support resistance in here, right? We like tap the single prints, find support, tap them again, find support. So I like single prints a lot. That's probably my favorite way to find these inefficiencies in the chart. Not only do we have that though, but back to the levels identifier, fair value gaps are another one. So fair value gaps are essentially anywhere in a candle where it hasn't been tested by like the wicks of previous ones. So you can see here, these previous wicks are right there in between. This has not been tested within those candles. So that would change depending on what time frame you're using, right? So like right here, it should be here and here, right? There you go. So this is a nice indicator to find fair value gaps by Spaceman. So that can act as support resistance as well. I like fair value gaps. And then I think that's it. I might be forgetting something, but those are the main ones to find inefficiencies in the chart. Is the SPX gapping up a bullish sign? Let's go check that out. So on the hourly time frame, this is our futures market. Looks like we came back up to test this range within here. So we'll see if this can get accepted. All right, we have kind of these two ranges. So let's see if this can get back above and test it as support. But you said there's a gap, so let's go ahead and check that. Yes, we have a gap. So with the FOMC meeting, I would assume we probably retrace this gap. It is bullish, right? The move out of this range was bullish, and it's bullish that you have a gap to the downside now because that is going to act as support. So we're kind of chopping in here with a ton of gaps. We still have gaps to the upside, but yes, this will probably act as support now. So while it tells us in the short term, expect to come down in here, right? Don't be FOMOing into longs on the S&P with the gap below you. But we likely, maybe only do a partial fill on this before continuing up to fill this gap. So, yeah, the fact that we even got this move is bullish for sure. Let's see here. Looks like we got 10 minutes until the numbers come out. I'm on YouTube right now trying to find a good live stream for us. I think I'm just going to do this one from Fox Business because they're actually going live for the conference. There's not a bunch of talking before it, which I don't want on the stream, so that'll be good. So yeah, press conference is in 40 minutes. Numbers are in 10 minutes. Are they going to cut? Are they going to stay paused? Are they going to hike? They're going to pause, by the way, which is good. We don't want them to cut. I know retail thinks that they want a cut right now. If they cut now, it signals something is broken. We don't want that cut yet. Really, they should have already been cutting. The Fed is doing a controlled demolition of our economy right now. They like to do this. Boom and bust cycles, right? The billionaires, the millionaires in our country, they make a lot of money off the bull runs and bear markets. They like to control that. They like having these bear markets to accumulate, and they like having these bull markets that happen very quickly to artificially pump prices so they can sell off onto retail and the cycle repeats. And the Fed is a big catalyst in making those Cycles happen, the boom and busts. Are you a fan of Camel Finance? I do subscribe to him. He's going for the higher price targets this year, but I do agree with his left translated cycle. I think we're on the same page as far as timing goes. Our price targets might just be a little bit different. I think his case is definitely realistic. Like I said, like it's possible we go to 250K, 300K this year. And if we did, I think it would happen this year, not 2025. But yeah, he's one of the first people I saw talking about that left translated cycle. I've been following him for quite some time now, since 2023. So yeah, I do like Camel Finance. He's pretty good. The bond market suggesting they are late to cut in. They are late to cut in. They should have been cutting sooner. But like I said, they want these boom and bust cycles. And if they were to have cut sooner, actually, I can't really say what the market would have done if they started cutting sooner. But they should have, and it shouldn't have been aggressive. I don't know why they have to cut in cycles and hike in cycles. It would be interesting to see if they would do like a rate cut, then pause for a couple months, then do a rate cut, then pause for a couple months. But instead, it's like we're going to hike consecutively for 1 year straight, and then we're going to cut consecutively for 1 year straight, or we're going to pause consecutively for 1 year. They do it in consecutive time frames. So they're doing something month after month after month when they don't even know what that data is going to do until 3 to 6 months down the line at the soonest. So it would be better, in my opinion, if they did a rate cut earlier this year and then kept it paused and then seeing how that cut affected the economy, and then they would actually know if they needed to continue cutting, something like that. I'm not much of a macroeconomist, though. I'm just a crypto trader, so I'm not going to tell Jerome what he needs to do, but I think it's pretty obvious what they are trying to do, which is a controlled demolition with the boom and bust cycles. 300K in a few weeks would be violent move to the upside. Is this a melt-up scenario? It is absolutely a melt-up scenario, like Bitcoin does sometimes when it gets very bullish. So if we take the time frame of this last bull run, let's just assume we're at this point in the market right here. Last time in 2020, in our move up, we went 140% in 28 days, and to get all the way up to the top end range, it only took 72 days. So last bull run only took 2 months to do this. To do this right here. So if we really are right here in the cycle, it still doesn't make sense to me that we go to 2025. It would happen within 2 months, melting up, and that would be, taking the law of diminishing returns. If this was 230%, let's just say 150 to 200%, somewhere in there. Let's see where these price targets get us from current price. We got about 150% would be $170,000, compared to that 200% is around $200,000. So yeah, this can happen fast, within 2 months. And I'm not rolling that out at all. I'm not confident in this playing out if we don't deviate back within the range. Right, we're going to take it day by day. If we just kind of do this, we're probably going to well above 100K. I think everybody right now is predicting 100 to 125K. I mean, the market doesn't do what everyone else predicts. So if we do actually do the bullish case, I think it's going to go higher than everybody expects. And people are going to be sidelined, and then they're going to buy back in at 170K, thinking it's going to 500K or something like that. Break above 67K in the next hour or so. Let's see, where's that 67K level sitting right above us? Yes, I would assume. If it is to be like our previous Fed meetings, we should see a move very sharply to the upside, and then a move very sharply to the downside. And then this is where Bitcoin decides where it wants to go. Is it going to actually be bullish, or is it going to roll back over at that point? It would surprise me if this, structurally, it would surprise me if we did this. But that's also possible, so we can't rule it out. Alright, so we got 4 minutes until those numbers do come out. Others dominance is a heavy support on the 5-year trend line. I actually haven't looked at others dominance. I've been looking at the Bitcoin dominance, which is kind of bullish. I know the others chart in general is a big support. Let me switch this here. This is at, back at sweep level. We got big resistance above it. Total 3 is a big support too. I'm gonna look at others dominance in a second. Don't worry. Yeah, total 3 is at big support. This is a volume level right here. That goes back to the, not that, previous bull market range. Then here, that's the value area low of that range. But the others dominance. So is it others.d? It is. Okay, cool. Yeah, it's a big support. It doesn't look like it's showing much strength at this support, but it's there. Let me go ahead and turn this on. Let's see. I mean, doing TA on dominance charts is kind of guessing, but we can go ahead and pull a fixed range on this, see what it tells us. Let's take this right here. Let's take the downtrend. Where does that get us? It is stuck on extend right. Let me turn that off. Point of control. So we are sitting on this point of control right now of this, the bear market downtrend. Let's try to take maybe, the whole range we've kind of rejected off of. So that's not great. What could we do to kind of pick a range in here? I'm going to go from these highs, this range within here. Once again, we're kind of getting the same level. You can see this is a big, where this blue line is kind of where this volume spike is. So yes, we are at big support right now. Let's see if it can hold. Like I said, we're not showing much strength. It looks like we're kind of just slowly coming down, and it looks like it wants to break it, but we'll see what happens. I think a reason others might not be showing strength right now is because there's just a lot more altcoins now than there was in the past. So your others doesn't take into consideration everything in crypto. It takes in most stuff in crypto, but yeah, there's just a lot of coins that are like scam coins now and stuff that isn't doing good. So that's why I kind of like different charts like Caspa to Bitcoin, because this is kind of, I think, your big altcoin for this cycle. And you look at something like Caspa versus Bitcoin, and we actually had a very bullish backtest of this downtrend in the Bitcoin Caspa dominance. So yeah, we do see altcoins start performing very well right now. Speaking of Caspa, all-time high. This chart's going crazy. This is my second biggest holding, behind Mogcoin. Alright, those numbers should be out now. Let's go ahead and check this. What do you know? They stayed paused. So What? Not surprising at all. So that is what the market expected. So the market is going to do what it originally planned to do. So right off the bat, because they're paused, we are going to see, or because they came out with numbers, we're probably going to start seeing that volatility. And immediately we are seeing price start coming down here on an open interest decrease. So that tells me a lot of longs kind of we're piling in at the top here. Let's see if my position is going to stay safe. They could grab this. My stop is at... Actually, let me check BingX real quick. What is my stop at for this position so I can kind of put it in the chart. If for some reason I do get stopped out here on stream. 65,638. That is my open price and stop loss. There we go. That is my stop loss. It's at entry. One minute. We can do the 1 minute. Any thoughts on Sol? Let me check the 1 minute real quick and then we'll go to that. Yeah, we see a nice sweep down on the 1 minute time frame. Did it take out important lows? Kind of did. Yeah, we have two lows at the same level. This was definitely a position getting filled in there. Went ahead and tested that position. We also have these lows though, right? This is what I expect to grab. Something like that. So we'll see if that does actually play out. Let me go to Solana though. Let's go ahead and do Solana and Solana Bitcoin pair. So do Binance and then we will duplicate this. Not USTD, USDT. Divide that by Bitcoin. Let's do this on Binance as well. Take off these. So we'll go to Solana first. See what we got going on here on the daily time frame. Very bullish compared to your other high cap altcoins for sure. I guess we can actually leave these volume profiles in here. You can see a nice back test of this 4-month value area high right there. This looks very good structurally. I do expect all-time high on Solana very soon, right? I think this will break an all-time high before Ethereum does. Yeah, we've already tested our resistance of that previous range. You can see 4-month value area high. Already back tested it, so a second tap up there is likely to break. And I do expect all-time highs fairly soon. I think Solana betas are going to perform very well. Like, I don't know, let's say dog with hat. Something like that. Popcat. I actually think Popcat's a little bit better. I think they got a pretty strong community. But I don't think they're going to perform as well as the ETH betas, like Mog. Solana looks good. I like this chart. We do have a potential sweep level here though, so be careful. I wouldn't be leveraging any of this. That's a sweep level. I also don't like Solana as a chain that much. It's always down when I try to use it. It always has glitches when I'm trying to transfer stuff, so they got low gas though. I like low gas. Let's go ahead and check that dominance though. So Solana versus Bitcoin is starting to perform good once again. We're holding the higher lows throughout the cycle. I think this is going to continue to perform better than Bitcoin. So yeah, Solana looks good. Do we have any volatility on the charts right now? Looks like it's trying to hold this low. Looks like we're doing some fib touch-in right now. On the 1 minute, it would have gone up to there. So, touch of 786. Let's see if it does hold this golden pocket. Like I said, though, this is probably going to get taken out. Link price target. I can't do price targets. It's all about just like understanding when the top is likely in for Bitcoin. Whenever Bitcoin tops, your altcoin's going to top, and what it does before getting there is a complete guessing game. But we can look at Link to just see if it's bullish or not. I like Link. I think it's going to be a good performer. It was a very good performer in the bear market. It really didn't go down at all, just kind of traded sideways. But if you remember last bull market, it didn't perform that great. Like, it had an initial pump that was awesome, but like the secondary rally in 2021, it really didn't perform that well. It just kind of traded sideways. So could it be a similar thing this time around? Maybe, right? It's definitely lackluster in the price action, but I think this is going to break out, right? We got a clear trend here. Bullish wedge, you could say, right? This looks like it could break out with haste. So I like this trend that you got going on here. This pattern. This probably does break out, and when it breaks out, it'll probably do some pretty cool stuff. Is it going to break into all-time highs, though? I don't know. So your first price target technically would still be your retracements, because we haven't made it to the top of these retracements. You can see I also have volume levels. So this is your previous bull market value area high, and that comes right within your golden pocket. So I guess I can actually do a price prediction on this because we are in retracements. So that would be your price target. $35. That's your like medium, like conservative case. This is kind of your like more bearish case, $26, $27. That's kind of worst case scenario, value area low. But I'd say it makes sense, $35. It's kind of a conservative estimate. Oh no, we're getting a bunch of altcoin chats in here. I'm not going to be able to get to all of these in the stream if we start getting a lot of comments, but I'll run through them really quickly. If you want to guarantee that your altcoin gets some TA done on it, or want like a longer TA on it, super chat's the way to go. We got like 47 people in here, so there's not a ton of people. I can probably get to your altcoins, but if we get more people joining in, then I would probably just have to need a super chat for those altcoin suggestions, because we're not gonna have time in the stream. That's something that usually happens every time I do a stream. We just get like piled in with altcoin suggestions while I'm trying to do Bitcoin TA, and it just doesn't work out. But no, you guys are good at suggesting these. Ave, you're still in the bear market range, so it's a loser this cycle. Does that mean it won't perform well now? No, I think it could perform very well now, right? We're probably going to break out of this range, and the initial break is probably going to be pretty violent, but you're not going to all-time highs on this. There's no way. You've probably had dilution, and the speculation is done for. That's why I like getting in newer coins, because there's the speculation. There's not much speculation to go on here anymore. But as far as where you could get to, golden pocket is kind of your best case scenario in my opinion. So like golden pocket to 786, I would say like $500 is a like conservative price target, but it's also like you're probably not going higher than that. So I would say at most you're probably going to 786. Watch out for this like 382 area. We can pull volume. And we get right above golden pocket. and then value area low is just below the 382. So these are 2 levels to watch right in here. You could also point of control, right? This big box, 266 to 441 is where I would expect that to go, just based on retracements. Look at Brett real quick. I wonder where we're going to get the best chart here. Oh, that's perps. Where did the... Is it not on Mexi spot? Maybe not. Let me go to... BingX usually lists stuff soon, but that's perps as well. Trying to find something that's like... Yep, you know what? We're going to Dex Tools. So we can get the full chart here. It actually does look kind of similar to those exchange charts, but I mean, it doesn't look bad at all. But 300K 24-hour volume. That's right? Yeah. 300K 24-hour volume and an over $1 billion market cap. Compared to MOG, it's a smaller market cap, $8 million 24-hour volume on chain. I'm betting on MOG, not Brett, for a reason. So, I think this is a risky play. If I were in this from the lows, I'd be selling it and rotating it. But I'm not going to tell you what you should do. It's got a structure that could break out to the upside, right? We could break out to the upside and go parabolic. In my opinion, from now on, going into the cycle, I think Brett's already kind of played its course, and it's going to get flipped by other meme coins. This low volume is just a warning sign, right? I bet most of your volume is on exchange. So if we go to CMC, we go to Brett. We see $23 million volume, and all of that volume is from exchanges, not on-chain. And I might be wrong, because I might have been looking at base, and there might be a higher volume. Because this is, let's see. No, this is Ether. So, I think that's going to be your highest volume. Dang, right? Because yeah, that's sushi. Yeah, it's just got low volume on chain. All of it's coming from exchanges, so it's all retail money. Syscoin. Love your channel, Camel sent me. But there's no way. Camel shouted me out? Yo, Camel, you in this live stream? I'm gonna have to shout out his channel, because yeah, I love his work. That's actually crazy. We can do Syscoin though. That's actually something I held for some time. I did end up selling it because I think it's kind of a loser this cycle compared to previous cycles. I just don't think it has the speculation. But yeah, I was buying this in the bear market because historically, this is like one of the only coins that's done 100x in 2017, and it did 100x in 2020. I don't know of any other coin that's done 200x's. So I bought it going, okay, well, if it's done it twice, we'll probably do it a third time, and then it just doesn't have the speculation this cycle. I like the dev team, though. I watched some podcasts with them. They seem pretty based. What they're working on is pretty cool. It's a pretty novel chain. You know, it's basically Bitcoin. It's got the security of Bitcoin. but it's like more scalable. It's a fork of like Bitcoin, so it's a pretty cool chain. I like Syscoin. I just think it's just so underground. It's so under the radar that it's not getting the speculation this cycle. They don't have the marketing, and that's kind of the reason it's just underperformed in my opinion. But would I be selling it now? No, probably not. I mean, I think it'll perform well again, just maybe not as well as other stuff. Anything that's this low back in the bear market range is considered a loser of the cycle. Although it did look good here, right? And when it does move, it moves pretty quick. So, yeah, we'll see what happens with it on the weekly time frame. It could turn into like a double bottom. It's not out of the realm of possibility that something like that could happen. I like it fundamentally. I don't like it as far as TA goes, essentially. Alright. How much time have we got? 12 minutes till the Fomc. I'm gonna go back to Bitcoin here. Oops. So we're starting to get the altcoin prediction, or a bunch of altcoin comments. Let's try to refrain from requesting altcoins because I'm not gonna have time to just go over all of them. If you really want me to cover your altcoin, I got super chats enabled now. So send me $1 and I'll cover it. It's not for the money. It's because I just can't cover everyone's altcoin. So Bitcoin's definitely going to sweep this. I can almost guarantee you. Another tap right above the sweep level. It's going to grab this. So we'll see how that reacts on stream. Let's see if it's a swing failure pattern of the level. I don't have $1. Like, what even is Cardasy? I'm going to look at it just because I have no idea what it is. And I like looking at new stuff. It's already on Binance. It has a very similar chart to Syscoin, actually. So what I said on Syscoin probably applies here, except for the fundamental part. I have no idea what the fundamentals on this coin are. But yes, potential double bottom on the weekly time frame. It really depends what Bitcoin does. If Bitcoin's going to 300K this cycle, these altcoins are set up for a pretty epic rally. If Bitcoin's actually just going to do upthrust after distribution, it's probably going to be a failed cycle for many altcoins. XRP will do really well. We will look at XRP just because XRP is something that marks tops in the market. Usually this thing goes last second. So if we see a range break and we see a fractal of this type of move happening on XRP, that will mark the top. Usually Bitcoin actually tops out before XRP makes its top. So this is kind of one of my cycle indicators of a top coming in, and we are starting to see that play out. So yeah. And I do think it could perform very well. It's a high market cap though. It's not going to be able to, like, you're not getting 100x out of XRP, that's for sure. Probably not getting a 10x either. But I think it's a pretty safe golden pocket retracement for sure. Right? Same thing we talked about with some of these other coins. Previous bull market range. We've already tested the value area low a lot, so it's probably going to break that. And then you're looking at point of, oh, let me do an actual line on that. Point of control or value area high, somewhere in this box. And then I do think this has the potential to go all-time highs. I do think it has that potential. So you could be looking at a 10x if there's a crazy catalyst for it. 10x at most. Like that's not a conservative price target at all. This is your conservative price target, just a retracement. You can go message Camel in chat. Is he live right now? Doesn't look like he's live. Unless it's YouTube's just not showing them for me. But yeah, that's pretty cool. Let me know where he shouted me out. Was it like in a recent video or something, or on Discord? Let me know. Let me get back to the YouTube chat. I'm like looking at this on my phone, and I just went to click on some other stuff. Open this back up. Looks like only 28 people are watching right now. Make sure to share the stream. Let's get some more people in here. The FOMC is about to go live. Like the stream as well. Hit that like button, which a lot of you have. 21 likes. Appreciate that. Alright, so if your sweep thesis is right for Bitcoin, would you suggest a long position given that it is still news to us FOMC week? No, not today. So I'm already in a long from the lows. I think yesterday was a good time to long, right? We had this sweep structure at the lows. CME gap fill right here. And then what you simply do is you take your fibs, swing low, swing high to get that structural edge after you do see that. And then you can enter in with a clear entry and clear invalidation. Right now, if you were to take a long position, let's just say on the sweep of this. So technically this would be valid because we know this is probably going to get swept. If you have a swing failure pattern here, you could take this, but you got to know what you're doing. Entry, stop loss. It's all about your entry, stop, risk to reward. There is the chance, as we talked about at the beginning of this video, that we sweep everything. That we sweep this. So if we do that, and you don't have a stop, you're going to get wrecked. Like if you go, let's just say 10x leverage, or let's just say 20x leverage, you're going to get liquidated on that. And it looks like we are getting the sweep of that liquidity right now. But yes, technically you could do it now, but it's a volatile day. If you're entering now, you're probably going to get stopped out. I might even get stopped out. We'll see. This red line down here is my stop loss. But my stop is at entry. I don't have any risk on the position, which is how you should always be trading. But yeah, go watch my Bitcoin trading series before you take any positions. Make sure you know what you're doing. It's not about trying to just like place an order because you think we're going to go to all-time highs and then just letting it ride. No, you got to be trading very technically and being able to time the market with clear invalidation, all that. So we got the liquidity sweep on an open interest decrease. That looks pretty good. We have a failed auction here at the lows. Let's go to the 5-minute candles. Not much of a failed auction, but we do see buyers stepping in here. I think this is going to swing down a little bit lower. We might sweep this secondary level. We'll see. Open interest is actually not coming down too hard here. Still green on the 5-minute. Big sell imbalances. Probably going to sweep this. Vishnu with the $2. Thank you. I appreciate that a lot. Top 3 altcoins you recommend to invest $1,000 each. I cannot give financial advice on this channel, but if it were me, well, actually, I can't say I would invest right now because we're kind of at all-time highs on a lot of my portfolio. So, you know, the time to buy was the bear market. But my top 3 holdings are Mogcoin, Caspa, Octaspace. I also like Tau Bitenzer, Metis DAO. And I think Tau and Metis are kind of better buying points, right? They're lower on the charts. But if you wanted to catch something fast, if I wanted to catch something fast, not you, I'm talking about just me, right? No financial advice. Caspa looks like it's going to replicate what it did back here and go absolutely ballistic. So that looks really good, but it could also swing fail, right? Always got to be careful when you have a break of highs. But I think so far it's kind of confirmed the break. It doesn't look like it wants to swing fail. But yeah, those are my top holdings. Caspa, Mog, Tau, Octaspace, Metis. Also some other degen plays I have. I actually have quite a bit of it. SPX 6900 and Kekik, the Vulcan Dwarf. That's some alpha there. Kekik and SPX 6900. If you go watch my top 5 meme coins tier list that are a ranking video that I did on my channel, those are two that I really liked on there, and I think those could perform very well. SPX is at the highest, Kekik is at the lows, but that is gambling essentially. I mean, still technically investing, but it's a bit of a gamble, right? Like they're sub 50 mil market cap plays, and you can't buy them on exchange. Cavell Ford. Hopefully I'm pronouncing that right. I appreciate that. €2. We got 3 minutes until Jerome does go live, and we are seeing a dump here on Bitcoin. But we see some walls. Do you see that 800 Bitcoin position that was in there, and then it got removed a little bit? Now it's 500. This is actually a couple positions, right? The 300 Bitcoin wall right in there is the bigger one. So we got some big buy walls. Let's see if the market makers are going to do market maker stuff today. What I'm going to do now is get this Fomc set up because he is about to go live. So we're going to go to OBS, and I'm going to get this right there. And let me go ahead and actually move this up here now. Restore that. Make this full screen. Actually, let me turn off my music. Full screen this. So can everybody see the FOMC in the top right? And then we got S&P and the dollar down below in the bottom right. And then let me move this. This is the like open interest and CVD for Bybit, so you can kind of see what those positions are doing. Go ahead and do that. I don't know where this. It's kind of hard to see it on my screen. Oh, that's because FOMC is smaller. Let me actually make that bigger. Scale that up a bit. Yeah, because this is not on a horizontal monitor. It's on a square monitor. I have like 4 monitors. So this one's on a square one, which is why it looks like it does. We're going to make that bigger so you can see more of it. And then we can drop these back down. Cool. So we got 1 minute until he does start talking. Let me turn up the volume on this. Let me know once he starts talking if you can't hear it. I'm going to go through your chats while I'm waiting. What level on Bitcoin to throw in the towel and say it's bearish? I would say if we don't hold the CME gap. So right now we could still have a bullish correction. Let's go back to this chart. All the way down to the CME gap, which is sitting 58.8 is the bottom of that CME gap. If we can't hold 58.8, 58.6 as support, then that's not going to look good. But
good afternoon.
Jerome is live, so let's watch this.
Dual mandate goals of maximum employment. This is the benefit of the American people.
There we go.
Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1%.
Purple tie and every
the
time
first
the
half
same
of the year,
speech. Yes,
down
but this
from
time actually should be
3.1% last
different.
year.
He should signal a cut
Private
for
domestic
September.
final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the
There's your
second
swing
quarter
failure.
after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer-run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Yep, same speech as always.
Gina Smilek from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Thank you. So on September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
So just to follow up on that a bit, if inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way. I'll give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter
He will
of
not
poor
signal.
inflation data at the beginning of the year.
I kind of
Then we
expected
saw
him
some
to
more
just
good
be
inflation data. We
very
had
wishy-washy.
7 months at the
He's
end of last
not
year.
trying to say it.
We just want to see more and gain confidence. And as I said,
This is like the first time he's really said it's on the table,
more
though.
good data
So
would cause us to.
I don't think
to gain
CME
more
Group's wrong. I
confidence.
think they're cutting in September.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say, really the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market too?
Higher
If the
high on
labor
the 1
market,
minute after holding the
is back in
fibs.
equilibrium, why is
Almost
restrictive
broke it,
policy,
86.
potentially very restrictive policy given the high real funds rate, warranted right now?
So this is the very reason that we're thinking about that we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions, and that's what we want to see. We've seen that over a period of a couple
This
of
is
years.
bullish.
And a move really from overheated conditions to more normal conditions. We are watching the labor market conditions quite closely,
If
and
price
that's what we're
remains
seeing.
to higher highs.
If we start to see something that looks to be more than
We need
that,
it.
then we're well positioned to
We need
respond.
this.
That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past, you've said that stronger growth wouldn't
something like that.
override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have growth isn't one of our three. We have two mandates, as you know. The labor market, maximum employment is one, and stable prices is another. So we weigh those two things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the
So
unemployment
the low
rate
is in.
generally
It's been
thought to be,
signaled rate cut. In
a
my
single
opinion,
a good
yes.
single statistic, but we'd be looking at wages. We'd be
In my
looking at
opinion, as long as
participation, we'd be looking at all
inflation
the
doesn't
things,
surprise them,
surveys, quits,
they're gonna be cut in.
hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say again, I think
It doesn't mean to
you're
go
back
long,
to
though.
conditions that are
Even
close
if
to 2019
they're cutting, that doesn't mean the
conditions.
low's
And that was
necessarily
not an
in.
inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor
Small
market in its
cutting
current state
is better. Yes,
as
that is correct.
a likely source of
I hope it's a
significant inflation
quarter
pressures.
basis point rate
So
cut.
I would not like to see material further cooling in the
0.25%.
labor market, and that's
Or
part of what's
0.25 point.
behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet, but we're getting more confident that we're on a sustainable path. down to
DXY,
2%.
yeah.
So those
DXY
two things are
dumping,
working
S&P
together, and we're
pumping.
factoring those both into our policy.
Bitcoin.
Chris
starting to pump.
Rugaber at Associated Press. You mentioned not wanting to see any
TPO
further
value
cooling in
high.
the job market.
Flipped into sport.
Why not, or would you consider preemptive cuts to prevent, if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of I don't think of it that way. I think of it as we're actually in a good place here. We're balancing these two risks of go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates, and I think this is how we balance them. It's a rough balance, but it does feel like the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low, and we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. layoffs remain low, so it painted a picture of a very static labor market. Is that sustainable in your view, or something that
I don't know.
worries?
This could
Thank
fail.
you.
So
We
I think
haven't had
all
much
of the data
confirmation,
points
but the
continue to
1 minute
point
has
to
backtested that
kind of the
TPO
direction we
value
would
high.
want to see. So that was taken as there was a decline in job openings. That was good. Today's ECI reading was a little softer than expected, so that's a good reading. It shows that wage increases are still at a strong level, but that level continues to come down to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Steve Leisman, CNBC. Mr. Chairman, back in March, you talked about cutting rates as a process, and in June, you talked about the idea that, well, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts? Talk us through the process that you're thinking, or is it just one rate cut? Or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen,
Now
significant
test
movement in
point
the
of
labor
control.
market. And, we're very mindful of this question of is it just normalization or is it more? We think it's just more normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this, we raised rates a year ago at the July meeting. And if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress, and the labor market has, I think, unemployment was in the threes, mid threes. So it's a different economy, and I think it's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is, that we have, we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about all the time is how do we keep this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5, core at 2.6. It's way down from where it was. The job is not done on inflation, but nonetheless, we can afford to begin to dial back the restriction in our policy rate. And I think we're just as part of a process. In terms of what that looks like, I think most you would think in a base case that policy rates would move down from here, but I don't want to try to give specific forward guidance about when that might be, because the pace at which it might happen, because I think that's really going to depend on the economy, and that's highly uncertain.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you really had a lot of momentum with a few bumps in between? Would you characterize that kind of momentum as back on track at this point in the year?
Actually, what we're seeing now is a little better than what we saw last year. Last year, as we pointed out late in the year, a whole lot of the progress we saw last year was from goods prices, which were going down at an unsustainable rate, disinflating at an unsustainable rate. This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you got 1 quarter of that. We had 7 months of low inflation. You got 1 quarter of this. I would say the quality of this is higher, and it's good, but so far it's only a quarter. So I think we need to see more to know that to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data. And things like the ECI report and, frankly, the softening in the labor market conditions, give you more confidence that the economy's not overheating. It doesn't look like an overheating economy. And it looks like an economy that's normalizing.
And if we were to think about the first couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into 2024.
So the thing about if what it is seasonality, and it could just be, it's very, very hard to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months we're reporting too low inflation. If you smoothed it out, it's a zero-sum game. And that's why we look at 12 months. We look at 12 months because that takes all that out, all those effects out. 12-month now is 2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting inflation sustainably under 2%, but we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices? Or is it more important for the American people that you keep rates where they are to bring inflation down?
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right? And so in our, quasi-constitutional document, the Statement on Longer-Run Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away, and you take account of the time to reach the goal. So
That's your 1 minute
for the
PA.
last couple of years, the best service we could do to the American people
Shorts
was
opened,
to focus on inflation.
longs now
But as
opening with
inflation
price
has come
continuation.
down,
If
and
we
I
can
think
get
the
above where the
upside
short started
risks to
opening,
inflation
they
have
will become
decreased
trapped.
as the labor market has cooled off. And labor market has softened. Probably the inflation is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have a restrictive policy rate. It's clearly restrictive. It's been the rate we've had in place for a full year. And the time is coming, as other central banks around the world are facing the same question. The time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Do I need to watch more,
You have,
as he said, what needs to be
event
said?
risk, basically,
He
with
says the same
jobs
stuff
report on
every
Friday
meeting,
and another one before you
but he
meet
is
again.
starting to
Are
talk
you
about
certain
rate
that
cutting
you
in
won't
September
fall
if nothing
behind the
changes.
curve
So
and
as long as we don't
lead
get
to
any
unnecessary
surprising inflation rates,
unemployment,
he's going to cut in
if
September.
you wait until September?
Certainty is not a word that we have in our business. So we get a lot of data between now and September, and it isn't going to be one data read or even two. It's going to be the totality of the data, all of the data, and not just it, and then how is that affecting the outlook and how is it affecting the balance of risks? That's going to be the assessment that we do. Of course, we'll all look carefully at the employment report, but so much other data coming in, and so much happening between now and the September meeting, and we'll make a judgment.
Thank you, Mr. Chairman. Edward Lawrence of Fox Business. I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
Well, we'll look at everything. We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole thing, and I think you do look at private demand extra carefully. To your point about government. So we'll just be looking at all those things.
So as a follow then, so could the Fed then be behind the curve? Because you said some of the reports, last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been, we had 7 months of good inflation data at the end of last year. We said we wanted to see more. We pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got a quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. So
Yeah, Ben.
but in
Nvidia
terms of
is
today,
going
your question about today,
pretty crazy right now. 15%.
we did have
18% from the
we had
pixel low there.
a nice conversation about.
We'll see if
this
it can
issue
accept
today.
back within the range.
overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous.
Crypto
All
Jules is
19
at a cafe
participants
right now.
Supported it.
It's pretty awesome.
But there was a real discussion back and forth.
Get some nice coffee.
of
I
what
can
the
just
case
imagine
would
him
be
with the.
for
He's got his
moving
like
at this
MacBook
meeting.
out on the table at
A
Starbucks
strong
or whatever right now.
Majority supported not moving at this meeting. That was the strong sense of the committee. But it's a conversation that we had today, certainly.
Courtney Brown from Axios. Thank you for taking our questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at inflation, rate-sensitive, interest-sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely restrictive, but it's certainly effectively restrictive. Yes, the lag should be on the way down. It should take some time to get into the full economy, affect financial conditions, and that affects economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move now in anticipation of our moves.
So are you worried then that if monetary policy acts with long and variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
Yeah, we have to worry about that. Just to make it clear, it's a very difficult, challenging judgment, and we didn't want to go too soon. We don't want to go too late, but this is how we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not signaling an overheating economy. Labor market, admittedly, the unemployment rate has moved up 0.7, and we're seeing a normalization there. But wage increases are still at a high level. Unemployment is still at a low level. Layoffs are very low. Initial claims have moved up, but they're pretty stable, and they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again, we are carefully watching to see that continues to be the case.
Victoria. Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect
they're
how
bringing
quickly
up the SOM
you
rule.
cut rates?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical thing that has happened through history. A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So, again, what do we see? What are our eyes telling us? We look at all the things we're seeing.
This is the SOM
What
rule.
it looks like is a normalizing labor market.
Signaling a
Again,
recession
job
is
creation
soon.
at a pretty decent level, wages moving up, at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So,
2000,
again, I've been through some of the data
2007.
already, but what we think we're seeing is
COVID.
a normalizing labor market, and we're watching carefully to see if it turns out to be more. If it starts to show signs that it's more than that, then we're well positioned to respond.
Is there reason to think that the labor market might behave differently this time than it has historically?
I think, history doesn't repeat itself, it rhymes. I think that statement is
I don't know
very
if you
true
guys can
about the
see this.
economy. You never assume
Should be
it's
able
going
to
to
see
be
it when it's
just the
right here.
same. An example would
Sum
be,
roll.
is there a
2000,
trend
2007.
increase in the level of vacancies? There are many,
Right
many
now.
examples, so it's never exactly the same. Also, let's remember that this pandemic era
It's the
has
10
been
over
one
the
in which
two.
so many, apparent rules have been flouted,
it's
like the inverted yield curve, for
unemployment
starters.
indicator, mainly unemployment.
So
Unemployment
many,
rate.
many pieces of received wisdom just haven't worked, and it's because the situation really is unusual or unique
Recession
in that so
imminent.
much of this inflation came from the shutdown of the economy and the resulting supply problems in the face of, admittedly, very strong demand.
There's no Starbucks
the
here at
whole
all.
situation is
Yeah,
is
Starbucks
not
is
the
it's
same
overpriced.
as many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So we're having to learn, we're having to, to be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
Thank you, Chair Powell. I'm Mara Mokwe with Bloomberg. There seems to be quite a difference between what the anecdotal data are telling us, such as the very recent downbeat beige book, and the hard data. Do you take those anecdotes seriously? That is, that the economy and labor market are cooling much more rapidly than what's shown in the data?
So I do take that seriously, and the beige book is great. What's even greater is hearing the Reserve Bank presidents come in and talk about their conversations with businesses and business leaders and workers and people in the nonprofit sector in their districts. But I'll tell you, it's a pretty, the picture is not one of a slowing or, a really bad economy. It's one of, there are spots of weakness, and there are regions where growth is stronger than other regions. But overall, it's, again, look at the aggregate data. Aggregate data is, particularly PDFP, private domestic final purchases, is 2.6%, and that's a good indicator of private demand. So we listen to all of that, and it
Let's
does.
see if we trap
does,
the shorts.
I think it's important to listen to anecdotal data and not just look at the aggregate data. Especially, it's very hard. GDP data can be volatile quarter to quarter, so it's just hard to measure economic activity. There are a lot of. It's just difficult to do. So I look at both. But I wouldn't say that the anecdotal data is uniformly downbeat. It's more mixed.
Thank you. Jolene Kent with CBS News. Chair Powell, thanks for taking our questions today. You have consistently said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table, it would be less than 2 months before the election, and former President Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
I absolutely do, and I think it's, first of all, we haven't made any decisions. I would say it this way. Haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate path of our policy. I really don't know. I do know how we will make that assessment. That's what I do know. So if you take a step back, the current situation, again, is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on nothing else, doing our part, whatever that part may be. We're using our best thinking. We're doing our best to understand the economy. We follow academics. We follow the many commentators who bless us with their commentary. But we don't change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support or oppose a political party, a politician, or any political outcome. The bottom line is, if we do our very best to do our part and we stick to our part, that will benefit all Americans. If we get it right, the economy will be stronger, we'll have price stability, people will find jobs, wages will rise in real terms, everyone will benefit. So that's what we believe, and that's how we will always act. This is my 4th presidential election at the Fed. I can tell you this is how we think about it. This is what we do. So anything that we do before, during, or after the election will be based on the data, the outlook, and the balance of risks, and not on anything else.
Just a quick follow-up. Do your economic forecasts and models take into account the two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No, we do not do that. We absolutely do not do that. We don't know who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that. You know, we basically, we have our forecast. We can run simulations of different potential policies, but we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. That would just be a line we would never cross. You know, we're a non-political agency. We don't want to be involved in politics in any way, so we wouldn't do that.
Thank you, Chair Powell. Nicholas Jasinski from Barron's Magazine. There hasn't been a dissenting vote on an interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are always meaningful differences. There are, and we talk a lot before, during, and after the meeting. We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. You know, no one has a veto. No single person has a veto. So it just is a question of who will vote for and against. We've had dissents. We haven't had so many during the pandemic era, and it just may be that we've felt more united because we felt under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
We're probably going to see the volatile price
Jean
action
Young with
after
M&I
the
Market
meeting.
News. Is a 50 basis
That's what
point
happened the
cut
last two meetings,
as a first
too.
cut at all likely or even on the table? Thank you.
I don't want to say, I don't want to be really specific about what we're going to do, but that's not something we're thinking about right now.
Jennifer.
Of course, I haven't made any decisions at all as of today.
Thank you, Chair Bell. Jennifer Schonberger with Yahoo Finance. Not to get ahead of the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
Well, so, the way the meeting is set up, the first day there's a discussion of financial stability because it's every other meeting we have that. And then we have an opportunity to comment on that. Then we have an economic go-around.
Oh, there goes open
And
interest.
then
They're squeezing loans.
This morning, we have the monetary policy go-around. And I think in people's economic go-around and in their monetary policy go-around, people express their views about this. And there's a range of views. People, as you will know from the speeches that they give, people have different ways of thinking about the economy. And so
longs come trapped.
in the
People
minutes, we'll lay this out in a much better way than I can do off the
But
cuff.
they're actually not trapped
But
if open
there's a
interest
range
is
of perspectives, and but I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end,
Decreasing, not closing.
everyone supported the outcome, not just the voters, but everyone. So I would also say some people examined the possibility,
we probably
the
grabbed
case
this.
for moving at this meeting. But overwhelmingly, the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in.
But there is a growing sense of confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question, that is the case. That, as I mentioned, you know, we think that the time it's approaching, and if we do get the data that we hope we get, then you know, a reduction in our policy rate could be on the table at the September meeting.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month, which you probably saw, in which he said, quote, "It might already be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk." Is he wrong?
So this is the judgment that we have to make, and we're well aware of the judgment. We're as I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, you know, we had a lot of advice, you know, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more. Then we saw some higher inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit. And as I mentioned, I don't think it needs to, you know, cool off any more for us to get the inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that that time is drawing near. That time could be in September, if you know, if the data support that.
And have the chances of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is, you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data.
No, it's in the
right
data.
Now. What's in the data right now
here.
is an economy that's growing at a solid pace, a labor market
The
that has cooled
unemployment is
off,
bullish, which is
but
not bullish.
Nonetheless, unemployment is low. You know, the data overall show a strong labor market.
The data says we are in 2007.
You know, so that's really what you see.
And 2000.
It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course
sharply weakening.
The job is never done. You know, we're watching to see, you know, which way the economy heads, and I think if we are to respond to weakness, we're certainly, you know, well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and, you know, a good labor market and inflation coming down.
Greg.
Thank you so much. In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function, and when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not the first cut, but the pace of the cuts going forward. They don't have a good sense of that. Is there anything you can say, like, how will we judge that?
Yeah, I mean, I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we had to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And, you know, when you're saying you're going to be data-driven, of course, it's always what the data, how they affect the outlook and the balance of risks, but nobody has great vision deep into the future. In terms of a reaction function, that's a long time, you know, discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, you know, again, you've seen significant improvement in inflation just for the last quarter. Markets move around on the data, really, not so much. It's not really what we're going to do. It's more just that the data keep coming in, and markets are very, very responsive to that data right now.
Go to Jeff for the last question.
Thank you, Mr. Chairman. I'm going to change gears on you just a little bit from all of the rate talk and whatnot. With Fed now being in the books for a little over a year, there hasn't been a whole lot of talk about central bank digital currency, and wondering if you could give us an update on where things are with that. Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things, the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed, because we play an important role in the payments sector, both as a convener and as an operator too. In terms of a CBDC, there's really nothing new going on. There's not much going on at all. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating, the story and what's happening out there. I think it's work that we need to be doing, which could be very beneficial down the road. But we don't have on a CBDC. We don't have any plan to. We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea yet. Thank you.
Finally. He walks off into the sunset. There we go. Well, what I get from that is obviously Jerome Powell doesn't want to say what everyone is thinking, which is that we're going to cut in September. I feel like he already knows that we're going to cut in September. He just didn't want to say it. So we should be cutting in September unless there's some crazy inflation data that tells us that we need to keep rates where they are. But yeah, the market is certainly going to start pricing in rate cuts, in my opinion. Before that happens, Bitcoin's probably going to do a little bit of a sweep, right? This 65.9 level is where I think we take these longs real quick, and then we should see that pump for this FOMC volatility, because we got a little bit of volatility like before he started talking and during it. I mean, we saw the dollar dump, saw the S&P pump a little bit, but that's all reversing to the mean. I don't think the true FOMC volatility has quite happened. This 1 minute TA on the chart doesn't really mean anything. I just did that for fun. And then, yeah, we'll see what happens. But essentially, this is your sweep level. This is what I kind of expect to get grabbed. Hopefully, I don't get stopped out. This is my stop down here. So hopefully, I don't get stopped on that grab. And then we can have our bullish continuation up to the upside. And then there is always the chance. I mean, we got some levels down here. So we'll see. I mean, it could be a liquidity play to grab that on like a sharp wick before heading up higher. But it looks like we should be getting this like right now. So coming in to fill these walls. So this is interesting. We got some orders in the order book. We can see if these get filled or not. Looks like price is starting to tap them right now. He is getting filled currently. Yep. 100 Bitcoin filled, 160 Bitcoin filled. Price is probably going to bounce off of it. I don't really think that's going to become the low, but maybe. If price really comes up here with haste and swing fails, that could become the low. That'd be like a failed auction. But let's see. Do you guys have any questions about that meeting? I know it was pretty boring. So let me know if you got anything in the chat. And then let me actually go ahead. I'm going to get back to OBS here. We'll do just this main screen. That should work. And then let me turn down the desktop audio. We'll play some music again. just have that in the background, and we'll probably keep the stream going for, I don't know, maybe till like 3 p.m. EST, or wait, no, 4 p.m. EST. It's 12:20 where I am. So, yeah, let me go ahead, get this music back up. Oh, I guess you can't actually hear that. Let me go to audio properties. That's weird. For some reason, the desktop audio is like a different input on this trade stream. Not sure why. Looks like Bitcoin is still above that wall. I want to see if that gets filled or not. So let's see. That is not picking up the audio. Interesting. Looks like we're coming back down to test that wall again. Like I said, I think it's going to sweep this. So I think this guy's going to get stopped out potentially. Oh no, the desktop audio was playing. I guess you guys can hear it. It just was so low, it wasn't even reading on my OBS. But yeah, now we should have a little bit of background music. Let me know if that volume's good. Who is typing in gibberish in the chat? What is this? You guys are speaking an alien language. Korean. Okay. You guys watch Sado? Sado is he's a gambler trader, by the way. Don't trade like he is. Hebrew. I am joking. There we go. We're getting biblical in the chat. We're speaking Hebrew. Solo leveling, best show ever. I'm gonna check this right now. What is solo leveling? It's an anime. I don't watch anime. I actually really don't watch any TV, Netflix or anything. I just watch YouTube. I'm not a fan of TV shows. I've had a lot of my friends say that anime is good though. I feel like it does have some pretty good storytelling. I don't know. I like watching real information, not like stories and stuff. I watch a lot of podcasts, that sort of thing. Boom. As soon as that wall got taken out, just instantly swept. Let's see if that's going to be it. Oh, interesting. We had a big sell wall over here on Bybit, 350 Bitcoin. Let me get these lines out of here. They better not stop me out. This is actually on BingX, so let me pull up. Let's really figure out where I'm going to get stopped out at. What was it? 65, 638. 38. About there. It looks like the sweep down might be the play first. They might start by taking the longs. We'll see. We'll see if this can get recovered. This is the sweep level here. This yellow line. We want to see a failed auction. Let me go to the 5-minute time frame. What happened to Jay Powell guy? He's done with his speech. Silver's pumping. That's interesting. Let's look at silver. I'll just do it here. I don't need this chart. Silver is pumping. Question is it just going to be a bearish back test of this? Or is it actually going to accept back within the range? It looks bullish, I'm not going to lie. This looks like a potential deviation. Usually precious metals will run no matter what. Like, markets are bullish, markets are bearish. These things are going to perform pretty well decently, usually, right? Okay, well, this is getting close to my stop. I have a feeling I'm going to get stopped, but we'll see. Stop at entry, though, so I don't really care. Yeah, that's not a failed auction yet. Probably going to go lower. But this is fine. First move is usually the fake move, so I would expect deviation back above. The problem is there's not a lot of levels in here. Like, we really should be holding this. If we swing back up now, that's acceptable. But if we go lower than like where my stop is, that structurally is just not going to look great, right? We should be holding these higher lows in here. We don't have much support below any of this. So if we lose this level, probably going to sweep all this, honestly. Probably going down here. There's my stop. I have been stopped out of my long position. Sad. Let's see. Yeah, we got a wall right there. Interesting. Price is probably just gonna wick right off my stop now. It's gonna be bullish. Stop me out for the reversal back up. No, this actually doesn't look too structurally sound. Like, we went to pull fibs here. I think we're 786, 886. Yeah, we're getting down to that 886. We could pull from the lows down here, though. I think that's more, yeah, around 786. We'll see what happens. It did not do what I expected it to do, that's for sure. Let's go to the 30-minute. Turn this off. Yeah, we'll see what happens here. They might try to hold this. That's going to be crazy if I really got stopped out at, like, pixel. I just checked. I still have a tiny bit running on the position because I staggered my entries, so my stops are staggered. But yeah, I'm like 90% closed right now. Oh, we are starting to see these like buy walls start getting placed in. I think a lot of people are betting on these lows holding because if structure is to be bullish, these lows are going to hold. So we'll see what happens. You think we're going down to close the CME gap? We could, yeah. That's not the first level though. The first level would be this, where I just circled it, which would be the sweep of 63.2. So we might not go lower than 63. But if we lose that, I mean, you got the 62.2 level. Kind of, this is like your box of liquidity here. If you lose this, then yes, probably at least a partial fill on this CME gap. But all of that can still be a bullish correction. It's not bearish until we lose the CME gap. First time I've seen a guy with good TA on YouTube. Keep it up. I appreciate that. Yeah, YouTube doesn't have a lot of great info. A lot of scammers. You kind of got to know the keywords to search up to actually find the good content. Essentially just calling out the 2022 entry model for ICT as your entry model. Good stuff, yeah. ICT though, ICT concepts are fine. ICT is an inner circle trader. He's actually a scammer. He just paper trades and like sells courses. If you look up like ICT as a fraud, you'll see that guy is actually he's not the best, most honest YouTuber out there. I don't believe he actually makes money trading. Shouldn't have traded FOMC though. Yeah, I took this trade yesterday, so my stop was at entry. Yeah, I've been saying you should not trade FOMC. See you in the next one. See you, Ben. Yeah, we can look at ETH real quick. I'm actually in a long on ETH as well. I'm in a long from like pixel low, so I'm in a long from down here. So my ETH long is safe. Bitcoin one definitely got stopped out though. ETH it's just kind of range bound right now. Reject value area high, probably gonna just do what Bitcoin does. It should outperform though. ETH Bitcoin looks bullish, so ETH is probably gonna outperform Bitcoin, whatever Bitcoin does here. I really hope this holds. This is still structurally sound. As long as we don't lose these fibs, lose this low, then that should be good to go for higher. And will I re-enter my long? Maybe. But not right now. Let's see. Do we like have any confluences for potential re-entry on a long? Let's see. So that's not really a higher low in there. Let's go to the 15. Yeah, you do kind of have it. Hidden bull div on your CVD. So you got that. That's good. On the 15-minute time frame. See, do we have any? We got some hidden bull divs as well, maybe. Maybe not actually. Nah, no like hidden bull divs or anything. You could say that's an exaggerated bull div, but it's not anything too clear. That might be the low. They really just did it to me like that. This is my stop. Sometimes putting your stop at entry, you get unlucky, but that's what you got to do. Sometimes it's gonna happen. But I have the luxury, because I didn't lose any money on my last trade, I can re-enter this if I want. I just want to wait for more confirmation. It is still FOMC day. So, sketchy to be trading right now for sure. I don't really need to be aggressively taking longs. I'm loaded on spot right now. Watch my stuff when you get the time. Cheers. Yeah, I'll check out your channel. I subscribed for now. My Kuji. He's emotional, but he's pointing out the algorithm backtest information. You understand that? If we're talking about ICT, yeah, I mean, his concepts are fine. They're like basic trading concepts that work. But I've seen a lot of information on him that proves that he is paper trading when he says he's actually trading, and when he gets called out on it, he like tries to deny it and stuff. And it's, I don't know. It seems like he's a bit of a fraud. But decide for yourself. Just look up ICT as a fraud, and you'll see some videos on it. But yeah, nothing wrong with his concepts necessarily. Russell 2K pump and dump. I actually wanted to look at the Russell because that did look very bullish. And it still looks very bullish. But we did get a swing failure of the highs, so... Yeah, swing failing, back within the range. We'll see if this actually does want to hunt back down to value area low. I could see that. Yeah, it looks like there was a bit of a pump and dump across the board with that Fed meeting. But it wasn't anything too crazy. Like, I think this is more of the actual volatile move. And this might be actually like a long setup, potentially. But it's like, if you're trading today, you got to be ready to get stopped out. How much percent of your capital do you risk per trade? Right now, it's very small, especially when I'm going long because all my money's in spot. When I start going short at the highs, I'll probably start taking out more of my capital. But let me actually do a calculation on that, what I'm risking. So... So... Let me see here. I'm doing a percent calculator. So make sure I'm not doing the calculation wrong. So currently I'm risking about 0.025 to 0.05% of my, like, basically net worth. 0.025 most of the times. So, but that's my entire like spot portfolio, everything, not just my trading account. My trading account I'll fill up with whatever at the time. And I have multiple exchanges that I trade on, but yeah, 0.025% is what I'm risking per trade. And ideally, I'm not risking anything because I'm putting my stop at entry. like I had here, right? I didn't get stopped out for an actual loss. It was at entry. Name of the background music. It's like a non-copyright playlist here. So you can screenshot this, whatever. It's from White Bat Audio. It's pretty good synthwave stuff, I'd say. Is Bitcoin just done as an asset? No, I don't think so. I think eventually it could actually be a reserve asset, especially if they do like the central bank digital currency, like Jerome Powell got questioned about. I think the future is kind of digital when it comes to currencies, and Bitcoin could be like the new gold, but it's going to take time. It's not going to happen fast. It'll be a decade down the line when Bitcoin would actually do its like super cycle. And the short term, Bitcoin could be done for with the recession that's coming potentially. But I don't mean short term as in like tomorrow. I still think we're going to go to all-time highs. USDT looks bullish, and that's bearish for Bitcoin. Yeah, I don't really look at stablecoin dominances too much. Probably should. I should like backtest that stuff. But yeah, this does look bullish. Historically, let's see. Yeah, it does look like this being bullish has historically not been great. But you've also, I don't know, like you've seen macro uptrends on this thing in bull markets. So I don't think it's like an end all be all. If USDT is bullish, then that means Bitcoin's going down. Certainly could be telling you something though. Maybe money's rotating into staples. Another tap of the 786. Let's look at this. So I want to see what this wall. It's not actually a wall. This is just a conglomeration of orders. Go to the 5 minute though. Take a look at this. See what order flow is up to. Looks like Bybit is going big long right now. Although my CVD just disappears every time. There we go. So looks like Binance shorted the lows. Bybit is longing the lows. Usually bullish. Mass 7 on YouTube. I actually don't know who that is. Easy to pass prop firm challenges. Yeah, I'm not really into doing prop firms. I don't know. I'd rather just trade my own money. But let me look it up. Let's see, Mass 7 ER. I've kind of already honed in my strategy. Like I don't know. I like the way that I trade, and a lot of it does include those concepts. But yeah, swing failure patterns are kind of the way to go, in my opinion. He's got a lot of clickbait thumbnails with the mouth open. That's it's normally not what I want to see, but I don't know. Some of this stuff, it's all very basic. Like, I don't know. Imbalances, volume gaps, the algo push, stuff like that. Yeah, I mean, some of this stuff seems pretty good. I'll check some of it out. His thumbnails just seem very clickbaity, but I also do clickbait thumbnails, so I can't really complain too much. That's just how the YouTube algorithm works. You kind of have to do that. But yeah, I'll check some of it out. Gold and silver are pumping. Let's see. Back to silver. Wow, yeah. Silver is really pumping right now. Let's check gold. Actually, I'll just go to the TVC. Wow. That's going for all-time highs. Pretty crazy. I own spot gold, silver, and Bitcoin. The future is hard money. Yep. I own some rounds of silver and gold. Always nice to have that. I'm going to be putting a lot of my crypto into gold after I sell it because, yeah, gold's been tested, stood the test of time versus fiat currency, which is inevitably going to go to zero. Nathan, appreciate that. SFPs are the most legit way to trade. Been doing it for 5 years. Yep. It's the best way to get like clear invalidation, clear entries, you know. You're getting the risk to reward in your favor, and you can usually take them pretty far, right? Usually it's your risk is very small, but your reward is pretty great because you're taking it to another swing failure. So you can take it to the top of the range, or you can take it to a continuation up or continuation down pretty far. Mass 7R is more advanced than anybody else I've seen on YouTube. Most advanced, more advanced than ICT. Yeah, that's cool. I'll check them out for sure. The guy I like the most is Kimba. He does live streams every day. He's legit. K1M6A. That's some big alpha for anybody watching. Pleasure, man. Take it easy. Makuji Crypto. Have a good one. So we'll probably stay on for another 10 minutes or so. I want to see if Bitcoin makes a new low here or not. So far, looks like order flow is trying to give us some bullish stuff, like a bullish regular CVD div, but I don't know. Actually, 5-minute CVD divs do work out a lot of the times. So we'll see what happens, but overall, we got open interest coming up into this. This does not look bullish immediately. These shorts will get trapped at some point, though, but just probably not yet. Especially with how close we are to these wicks. This is probably going to get broken. We'll see if it's a sweep here. This is possible. We'll see if that becomes a sweep structure. Outside of a sweep structure there, I don't think you're going to get one here. I think this has to hold. We'll see. Let's start trying to identify some levels in here, because we got the value area low of more macro range there. We just popped it right now, so that's 886. We'll see if that can swing fail. If not, let's pull some fixed ranges in here. Where do I want to pull this from? Let's try these two lows, maybe. So this is what already got tested. So that is a value area low. And this is technically a swing fail so far, right? It's not super clean though. Like that failed auction isn't the best. It wasn't a very... I mean, it's clear enough of a sweep. Like it grabbed the positions, but I don't know, not enough open interest is resetting. Not much of a failed auction. Not much of support on it so far. Yeah, you see we're just smashing through it. Now that's a bit more of a failed auction there. Okay, now we're seeing shorts start piling on at the lows. Now if price bounces, that'd be more bullish. So we'll see. At this point, yeah, that's going to be a good failed auction. But price actually go up and show support, or else that is not a failed auction. That is just heavy selling pressure. So we'll see. This is our wick low, which we took to. So is it going to be a swing fail of both of them? Maybe. There's really no support down here. We already grabbed all the inefficiencies, so it doesn't make too much sense to do that. What does CME up to? So CME has not swept. So like this is no position zone right now. You got to wait for CME to react to take a position, in my opinion. So we're just waiting. We'll see what the play is. Yeah, we're just cruising down right now. Alright, that could be a failed auction. So we got a lot of shorts piling on right now. If wherever price starts to rip up to the upside is probably going to be our low. But you got to see the buyers step in. So yeah, we're seeing open interest start closing. We got to see buyers start stepping in. We'll go to the 5 minute. Let me go back to the chat, see what you guys are saying. Since we got that volatility on the charts. Nothing. Okay. And this is why you do stop at entry. I could have had my stop at this like wick low down here and had a little bit of a better invalidation, but stop at entry is the way to go every time. Even stop at profit. But this wasn't a good area to put stop at profit because it was going into FOMC day, so I wanted to get it as low as possible. And that's your failed auction, potentially. It's just like not at a good level. If this was at a better level, I'd be market smashing right now. But we're in no man's land. We have, yeah, we still got some hourly divs. Maybe just a 1 hour div. 90 minute. 45. 30. So we got some bull divs, regular RSI bull divs. Check the 1 minute. Longs are trying to open right now. Let me see what my exo charts is saying. Very similar story here. Oh wow. Look at those buy. That is a lot of buy imbalances. Where did that come from? Someone market smashed. So is that going to be the low? What is this? 64,885. Failed auction. Buy imbalances. These shouldn't be taken if it's truly bullish, but I would want to see a reclaim of the actual sweep of level. Let's see. Looks like that was maybe Bybit that market smashed. They had open interest kind of spike in there. Heavy delta. If this is truly sweep, it should not lose the golden pocket. So we will watch this. Is swing failure pattern catching dips on a chart you know well? I'm a noob. So a swing failure pattern is like when you have a low, like this low right here at 65.2. You go ahead and sweep below the low and then reclaim it. So you swing under it and then you get back above and reclaim it. That is a swing fail. If it failed to swing under it. So if you were opening a position right now, you'd be like front running that swing fail because you don't actually have confirmation of it yet. We need to get above this to claim it as support. Was that the bottom? It's possible. We'll see how it plays out. Like I said, it needs to hold this golden pocket. But if you were taking a long right now, you've got confluence just to do so. As long as you just got to use this wick as your invalidation. It should not lose this. Where is the best place to learn your trading styles, tools, etc.? I have a playlist on YouTube, my Bitcoin trading series. It covers a lot of what I do. In the Discord, there is a section, a channel for trading resources that have all the different tools that I use, plus more. And if you really want to, you can do the Crypto Eagles VIP, which is my VIP Discord. And that's actually 50% off right now. And this is the last day that's going to be 50% off. Just click on that link. It's in the description. You can read more about what that offers and stuff. Also, just join the free Discord and you can ask me any questions you got in there. But yeah, I got that playlist on my YouTube. What is price gonna do? It's very 50-50 right now, what it's trying to do. I wish it was like above the sweep level doing this. There's your golden pocket test. Let's see if it's gonna hold. I really want all of this to get reclaimed now. We want a higher high, back test sweep, and then we go. I like these buying balances so far. Let's see if we can hold them now. When we come back down to test these buy-in balances on the footprint, we should hold them. So let's see. We're testing them right now. Price should wick off of this. If not, it's not going to be super bullish. This is all like 1 minute time frame stuff. Really, you should be just looking at the 5 minute. 1 minute's a little bit too small time frame for me. So there you see the balance. I'll go back to the 1 minute to show you this. You can see how we wicked off of these buying balances, so that's good. Once we break this range to the upside, it should be pretty quick. We'll see how it goes. I really just want to reclaim that sweep level. Let's see what chat's saying. Where do you think we go in the next few days or hours? I kind of like what I'm seeing here. This could potentially be the low. If this isn't the low, what I was saying earlier, like this 63.2 level would be your next kind of support. This is purely a deviation to get back above sweep, which we actually did right now. So yeah, I like what I'm seeing on the charts. Are you in any leverage position right now? So I'm in an ETH long from the lows, and I didn't say it, but I took this trade. I am now in profit on a trade. I opened a long down in here. Swing low, swing high, a golden pocket back test. I took this live on air. So I'm here. I can't really feel comfortable putting my stop at entry yet, but as soon as we can kind of get some more confirmation here, my stop's going to go to entry. My stop's going to entry on this limit right now. So yeah, I'm in a long position from the lows. But my risk is small. Don't be FOMOing into longs just because I went long. My risk is this invalidation, small position size compared to my portfolio. Like I was saying earlier, like 0.025% of my portfolio is being risked on this right now. Where did you draw the fibs from? So for this is 1 minute time frame. Let me actually delete these so you can see what I'm talking about. It is from your wick low right down there to your first high on the 1 minute. And then you back test that. So this is very, very small time frame stuff in here. Yeah, initial wick up to back test sweep level. Then come back down under sweep level, and this is a front run. So this is a very aggressive entry, essentially. You're front running the assumption that it's going to reclaim. So not always something you want to do. All right, this is like the most aggressive way you can trade. The safer way to do it is to wait for the reclaim of sweep level on 30-minute candle closes. Even wait for like a higher high and then take the golden pocket. But yeah, that's essentially the fibs. And each time it makes a higher high, just like right now, you just keep pulling this up. And essentially you want to just hold this golden pocket. So as long as that can hold, that's good. This should start acting as support though. Really, you don't want to lose this at this point. So you can see that sweep level acting as support. It can dip below it though, right? Like 382 is probably going to get tapped as it is right now. We'll see. But yeah, this sweep level should hold. And that's how you pull your fibs. Just swing low, swing high. And this is essentially, you can pull fibs on any time frame. So if you're trying to find support, it's swing low, swing high. If you're trying to find resistance, it's swing high to swing low. So like if I were to take, let's go back out to this chart. If I wanted to find resistance now, like you could do any time frame. Swing high, swing low, there's your resistance. And these are all the levels in different colors. Go ahead and screenshot this if you want to copy my fib levels. I feel like I got the best looking fibs out of anyone on the internet. Just kidding, kind of, not really. I'm just kidding. But yeah, these are the fib levels. 382, 618, 65, 58, 667, 886, 236, 0.5, 786, 702, the 1 and 0 obviously, and then you can do more too. Fibs are just like mathematical levels that tend to play out. They're like guides to your trades. They're not anything you should just put blind limits into. They're just a guide. Let's see. Keep in mind, World War III is likely at all-time high. Yep, I think it depends who like gets into office, but yes, I mean, especially recently we had Israel, like I forgot what country they bombed, but they took out some Hamas leaders. So yeah, the tensions are high. Iran is pissed. We got warmongers in office right now. Hater love Trump. He's pretty good with foreign relations. He should be able to keep us out of a World War III. Did you learn TA off Jason Caspa? I did at the beginning. So he's not bad. I think he does decent TA and stuff like that. But it's very surface level. And he uses a lot of like market cipher. He puts all of his weight in that. I'm not a huge fan of market cipher. I'd rather just use RSI. And those market cipher divs, they play out around 50 to 60% of the time. They're not very like accurate. He knows what he's doing though. He uses order flow. He just doesn't have a lot of videos teaching about it. But yeah, Jason Casper's pretty good. I like him. He's legit. He does a lot of like hedge positions, so he'll long and short at the same time, which I think is it's a decent strategy. I do that sometimes. So yeah, at the beginning, that was like my main guy I watched at the beginning. But it's more surface level, right? He doesn't get into like super advanced stuff, at least that often. And he has some market analysis that I don't particularly agree with, but that's fine. As long as he's not a fraud just pretending to be a trader when he doesn't actually make money, then that's all good. He's a profitable trader. That's all that matters. When do you see all-time high on Bitcoin? Soon, within the next month. Show your trade you just entered. It's on BingX right now, so I'd have to go ahead and pull. Like, I'd have to put my VPN on to show it on the computer, but what I can do is, well, I mean, I'm probably going to exit this position too if it comes down, because I'm now red in the position. So one of my stops might get hit here. We'll see. I will show you my negative P&L when it gets stopped out. Is this going to fail? So we swept this low here. Yeah, this doesn't look great. Open interest is, open interest is not decreasing. That's going to sweep probably this low. And this is why you have tight stops and risk a small amount of your portfolio. Because, yeah. Also, this is why maybe you wait to enter. You don't be super aggressive with entries. Trying to hold the 886. Not looking good for me. But who knows? Maybe it'll hold the 886. Because it's not going to want to test these seller imbalances. That's the nice thing about failed auctions. Is like, whenever price bounces off a lot of sellers, it's going to want to keep those sellers trapped. So that's where we're finding some support here immediately. But if it's bearish, it's not going to care. It's still going to just fill them. So... yeah, we'll see. We'll see what it do. And I will show you the position after I'm more confident it's actually going to hold. Or whenever it gets stopped out. And then we'll probably end the stream after that. If I get stopped out, I kind of deserve it. I was the one that said, do not trade on FOMC volatility day, and then I go ahead and take a trade. But that's just me being aggressive with longs that are small position sizes. Do not copy trade me. Let me check the chat. Warfoot pumps gold and silver. Yeah, we did have that catalyst today. So we're coming back up to test this golden pocket. What we want to see is clear, like, let's get it back above the golden pocket. These will flip as resistance a lot of the time. So if we see this flipping into resistance, that's not going to be good. But if we can reclaim it, then maybe I get away with the position. But you see initial rejection off the 618. So we'll see what happens here. I don't like looking at the 1 minute time frames because it's just you're gonna be flip flopping every 2 seconds. Let's see where this 5 minute closes. If we can close the 5 minute above the golden pocket, that'll be good. We got 8 seconds left on this 5 minute close. One second left. There we go. We got the 5 minute above the 618, just barely. That's cool. I still might get stopped out. My risk to reward is essentially at a point where I could take this trade dozens of times. As long as I get one of them right, I will be able to make the money back from the losses. And that's what's so great about these swing failure patterns is, like, even though I'm underwater right now and I'm taking on some risk, the risk to reward is what really matters here, right? You're a risk manager when you're a trader. So essentially, let's say my position was averaged in around the 0.5. My risk is 0.4% on Bitcoin. Where am I taking this? I'm going to take this to all-time highs. So I'm going to take this to like 76. So if I take this, I'll probably do 75 actually. If I take this to 75, there's my risk to reward. So yeah, I can take this trade I consider about 38 times in a row. As long as I get one of them right, then I'm good. And I might get the first one right. You know, this structurally looks pretty good now. I was a little worried at 886 tap. Normally, whenever you tap the 886, you're done for. But that's why I always put your stop at a lower low, not necessarily the 886, because a lot of other people also put their stops here. So that could be a point where market makers place their longs to get filled. So yeah, let me go ahead, since I don't know that it's going to immediately stop me out. I know you guys want to see my position. Make sure I'm legit here, and I'm still negative, so I'm gonna share my negative P&L. Let me go ahead. I'm just gonna screenshot it and put it into my Discord. There's no way I can fake this. Put it into the moderator section. This is where I usually like upload those P&Ls. So my risk on this is like $60 if I get stopped out, I think. So I'll probably be losing those $60 assuming this fails. But right now, well, when I took the picture, it was negative 15. Now it's a little bit lower, but there it is. That is my position. Yeah, there's nothing really on the order flow that tells me this is bullish immediately. I really liked when we, because I saw these seller buyer imbalances and the acceptance above that. I really liked it, but as you can see, yeah, I got taken out. So I lost about, that was an $80 loss on the trade. It is what it is. So that's pretty fun. We got stopped out trying to long FOMC. I gotta walk it like I talk it. I said don't leverage during this, and then I'd go ahead and take a long. That's what I get, right? Let's see here. What is chat saying? Those are a lot of lines, dude. Yeah, it's because I'm entering a position. I'm trying to figure out every like level that Bitcoin is tapping to see if it's bullish or bearish. And at this point, I don't know. This was kind of the last line to hold, that swing failure. Now we're testing this volume down here. Yep. Bit of a falling knife right now. So I would not be attempting anything else. Should I enter a short? No, do not enter a short. No, the time to take shorts was up here. There really hasn't been any confluences for shorts other than up here. If anything, you'd be taking a long right now, because we're at volume support, and we got a bit of a failed auction. But yeah, I don't know. It's not really the time to be taking trades. Are we gonna bounce back? Probably. We'll see. If it's another swing failure, I might take it again. So like a sweep of a sweep is something that happens, and I like that we actually have volume support now, because this was kind of like no man's land. I was just trading a potential deviation back within, and I should have just waited for this golden pocket retest. I kind of marketed in some here, and that's why I didn't put my stop at entry. But yeah, I should have my stop at entry on that. But we'll see. I want more confirmation now. I'll give myself one time to mess around with the trade. After that, I want more confirmation, so I don't just keep, taking losing trades over and over again. See what ETH is doing. So ETH is testing this value area low now. Interesting. I'll probably stay on for another 10 minutes. I don't know. I keep saying I'm not going to stay on that much longer, and then I start filling positions. So let's see here. Let's go back to the 30-minute. So there's not too much to go off of. Open interest decreasing into this overall is bullish though. That could be your low. Yeah, sweep of a sweep sort of deal. If this can go for a higher high, then I might consider taking it, but one volume level isn't the best, and we lost. So I also had confluences with like RSI bull divs before. We kind of lost most of that. Now we can regain it though, because we still have time on these candles. We still have about 30 minutes. So if we can get back above these levels on the 30-minute, it can actually still hold these divs. But yeah, technically so far we have lost those. I would say at this point they're going to start hunting liquidity. So since that didn't work, probably next place is here. Maybe here, right? Like this is the last line of support before this starts getting hunted. But you can see the volume level playing out pretty nicely. That's cool. You got to see that act as support. So we'll see if that holds. The market is so manipulated. Kind of. It's more of just an aggregation of the buyer and sellers in the market. It's not really manipulated. Like you'll have whales that try to manipulate it, but they're not. It's not like a pre-programmed thing. There's not one person that controls the market. It's a bunch of people trying to market make it that have their own like idea of what they want to happen. So yeah, it's really like, can you read the data? Can you interpret it correctly? And then the market makers are also looking at that same data. Can someone tell me why Bitcoin dumped right now? Dude said rate cuts in September. Shouldn't market respond positively? Well, with FOMC, fake move or first move is always the fake move. So in my opinion, first move, and then we go. But we'll see. Maybe it comes all the way down to grab everything. I think there's just a lot of longs that were opened within this range, so we had to take out those longs. And now that we lost the sweep of this, it's kind of more likely we do a full flush on those longs. We'll see. See if we can hold this volume. Bing Bong just got here. What's up, man? Yeah, they are going to cut in September, though, probably. It's kind of what I got out of it. Jerome didn't really say too much to give us much info in his speech today, but that's kind of what he was thinking, or what he was saying. You know, this would be like the same sort of setup, like you're front running a sweep on the volume level now. We keep going until everybody's run out of money or guts to leverage. That's what Resnick said. I don't know what you mean by keep going. You mean keep going down? Maybe. Do you think price could go below 60K today? Probably not. Yeah, probably not today, but yeah, we could hunt for the CME gap. I mean, it's FOMC day, so TA doesn't really work right now. We got to see what's going to happen here. I wouldn't be surprised for Bitcoin to just like launch up to the upside right now and just turn this into a big deviation and just send on up. Oops. I like that we're holding this volume very nicely. That level is working out pretty good. And we did have a massive open interest flush here. I guess not as big as the first one, but yeah, we had a big open interest flush going into this, so. But yeah, I got to get to making a YouTube video for the day, so that'll be coming out later, and I might take another long here. We'll see what price does. I am still trying to get into these lows potentially, so we'll see what plays out here. But I'm already in a ETH long, so I'm not aggressively trying to really take anything. I'm already in profit on that. I'm just taking this more for backtesting reasons, so I can know that I am consistently profitable over the course of time, because that's the most important thing when it comes to trading. But yeah, if you guys have any questions about anything I talked about, or just want to join the community for this channel, link to my Discord is in that description down below. Also links for that VIP Discord and BingX. Those are only for the months of July. They're like limited time events. Well, my Discord, the VIP one, is 50% off, and then the BingX event is limited time. So check that out as well. And then Real Guest says he has a question. Yeah, you can ask it right now in chat, or you can just ask it in my Discord. Links in the description, and I will get to you on that. When will my father come back from getting milk? That's a good one. So yeah, that is where we'll end off the stream then. Thank you guys all so much for watching, and I will see you all in the video I upload in a couple hours from now. So take it easy, guys. Good luck with trading and investing.